Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now there's a little bit to digest, and I sort of covered a bit of this last week, but let me just see where I think things are a little bit out of whack, right? So at the moment, right, let's just look at the charts. The dollar, okay, dollar Swiss, like the dollar's just going up against everything. And I think a large part of that is dollar yen. Bit of a mismatch there on dollar CAD and oil, but you see euro under pressure, sterling's under pressure. This is a big dollar move, right? Aussie not going down as fast, but the Kiwi definitely going down, another 0.25% factored in there for rate cuts. Now, so you see what's going on. Like the dollar is going up. Now, if I just come back to the interest rate tracker page, it's quite interesting, right? It's because let me just shrink that up a bit. You've got the market is still factored in 66% chance of a Fed cut, right? Then you look at the Bank of Japan, right? The yen is super weak, but I mean on hold 66%. There's still a good chance here, 34% at the moment, for them to raise rates, right? So there's a little bit of imbalance. And when I say imbalance, the dollar's going up, right? And you think, well, if the Fed are cutting rates, yeah, sure, it's been factored in, so they might be unwinding a bit of that. But the bonds, right? And I've just gone back to my global market monitor just so you can sort of see a bit more because the beast is awake and the Nikkei is like a super impactful equity these days, equity indice. I mean, it always has been, but when it kicks into gear, it's driving dollar yen around the place. So we need to be keeping an eye on that. Now, the US interest rate yields are long dated stuff. The 5 through to 30 years are all higher, right? It means a higher dollar. And so we've got a higher dollar, but the Fed are looking to cut rates, right? So there's a few things to think about. And the unfortunate thing for us, right, looks like there's not going to be any non-farm payrolls this Friday, right? They're government numbers. But we are sort of looking at the situation where the market, there is some sort of private numbers coming up. We need to work out exactly what's going on. And if I just come back to those charts, right? Well, actually, let me just come back to the interest rate probability page. Okay, so what we've got is the Fed, right? So they're cutting ECB on hold. Now they're 67%. The Bank of Japan, 66% on hold. Bank of England, 56%. Now this is a line ball decision. This is on this week, right? It's going to be as loose as a goose, that number. 93% chance that the Bank of Canada is on hold. The RBA is on hold. They meet tomorrow. So another central bank there lining up. And if I just scroll down just a touch, you'll see that the RBNZ are 87% factored in for a 2.25% cut, right? And no surprises, the Swiss National Bank on hold there as well. So we've got like a situation where things are developing. Now, brush that aside. So we understand that. We'll come back to that each day and have a look what's going on, especially around the economic numbers, which I'll cover in a second. But you look at the live signals, and there's a very clear sort of profile here. The top four majors are very clear. These ones have got good direction, right? Sterling going down, right? The Kiwi definitely going down. Dollar yen at the moment going up, and dollar CAD going up. These are the four ones that I like the best. Now, out of those, right, if I just come back to the interest rate tracker, you look through all the central banks, and this is the funny one, or not the funny one, like the Fed are, 66% factored in for another rate cut. So when they turn on their numbers, the economic numbers, if we see any weak numbers, they'll be cutting, and Jerome Powell will be changing his context or speech very quickly. At the same time, if we got stronger numbers, then you know what? They would start taking off another cut off the table. But outside of the Fed, you come down, there's one central bank that is still going downhill, right? That's the RBNZ. So when you come back and look at the live signals, you'll find the Kiwi is lighting up everywhere because it's got very clear direction, right? Sterling Kiwi up, Aussie Kiwi bullish, Kiwi CAD bearish. Everywhere you see the Kiwi, it is going down, right? It's probably one of the key instruments to be focusing on just at the moment. If you're trading the majors, which is a little bit problematic, obviously, with these numbers. Sterling, dollar yen, Kiwi, and dollar CAD. Now, I had a look at the charts. The signals don't lie, right? What we're looking for is objectivity. Tell us when to get in and when to get out. We just need to keep an eye on what's going on through the market outside of this because it's very quiet without the US numbers. But there are some private numbers coming out later in the week, US numbers, right? And I'll show you what they are. So coming into Monday, we've got the Swiss inflation numbers. You know what? Heaven forbid if there's any weird numbers, any weird variance there, then we may see some sort of trading activity on the Swissy. But for the moment, Swiss down, dollar up. ISM manufacturing numbers, I don't think these are coming out, right? The main ones, actually, they could be. Actually, sorry, they could well be ISM numbers. And then you've also got, if I just scroll down here, just so I don't make a meal of this, yeah, all the ISM numbers are going to be coming out. On Wednesday, we get the AD employment change, right? That is a private number as well. Now, these numbers are usually, some of them, like the ADP employment change, it's not a big number. But because there's no non-farm payrolls, it is going to be in play, right? So, but this is what I'm thinking, right? This is just what I'm going to be doing anyway. I'm going to take the US dollar out of the equation and start to look at trading the crosses, sterling Kiwi, euro Kiwi, those sorts of elements, right? Because then I don't have to worry about any random updates around the US dollar. And once we get into Tuesday's trading, right, it all kicks off. Sorry, Wednesday, I should say. Let me just scroll up a touch. Oh, okay. Look, we've got the RBA interest rate decision, right? What I've left the trading economics calendar here on all the numbers, low, medium, high impacting, because some of these calendars don't rate some of the big numbers with respect. I'll show you the Kiwi ones. They get left off. Okay, RBA interest rate decision, no change expected, right? This is almost a national holiday, the Melbourne Cup. So, and it comes 5 minutes before the start of the race, right? So it is absolutely crazy. I've seen them cut and raise rates on the Melbourne Cup day. Now, there's no chance of a hike, but it looks like they're going to stay on hold. The statement will be key tomorrow, but I'll cover that in the daily market insight tomorrow, right? We've got Christine Lagarde speaking, so keep an eye on those sorts of things. Like, to me, focus on take the dollar out of the equation. Now, I've been telling you from the start of this video, Kiwi is a big player. Now, this is why I left the all the low impacting numbers on, because these are the Kiwi numbers. And these are hugely impactful, right? Like very high impact. Employment change, unemployment rate. This is going to be a big one to determine, you know, where that next leg of Kiwi goes and where the Kiwi crosses could light up very quickly, right? Once again, I'll cover that as we go into Wednesday. But that is, to me, like a really great opportunity. We do have the RBNZ press conference. Okay, so I don't know what that's doing there. So maybe they've got some sort of spiel coming up because they don't. I think it's the 10th, right? So they've got a week or so before they come out. I don't know what the press conference might be. Then you come down into sort of Wednesday's trading. Okay, factory orders and a lot of these numbers. I don't think they're coming out, right? So understand what is coming out of the US and what isn't. You come into Thursday, obviously the Bank of England, right? This is a line ball decision at the moment, whether they raise or cut. So I'm starting to err on the side of caution with, well, not caution, but just where the pressure valve is. And I like the idea of a cut, like a surprise cut, really stimulate the economy leading into, the November, December period, right? 56% to 44%. That means this is going to be super volatile at the time. What we can focus on is the sterling crosses. Take the dollar out of the equation. Well, the sterling against the dollar is already going down, but we can potentially find some better trades. Once again, the daily market insight, I'll give you some details around what to focus on. Then we come into Friday's trading. There's sort of numbers all over the place, and this is what's happening, right? The numbers start banking up. You might see on some of the calendars, there's 4 or 5 jobless claims. It's November, October, like every week that they've shut, they'll just start banking up the numbers. And this is going to be a big issue for us because when they start releasing these things, it's going to be all over the shop. I still think any of these numbers are weak when they come out. The Fed will be cutting very quickly. It's going to be a bit of a explosion. Now, Friday we've got Canadian employment numbers. Right, this is almost a good thing that the US non-farms aren't coming out because it gives us a chance to have a look at those numbers. The Michigan consumer sentiment numbers, they will be watched very closely on Friday as well. All right. So it's a little bit of a weird one, right? Because I'm going through the calendar. I've got it set on all numbers here. If I just come back and I'll change that to just the medium to high impacting numbers, and that sort of shrinks up the calendar a bit. But you know what? I've got to sort of explain to you which numbers are coming out, which ones aren't. It's like I've experienced this before. And the last time the big one was like 5 weeks they were down. There's no sign of these guys coming back to the table just at the moment. So with that in mind, as I said, I think you take the dollar off the table unless you're very, I mean, I'm confident that these four pairs are doing the exact right thing. But if a number or an announcement comes out about these US numbers and it's weak, then that's going to change very quickly, right? Because the US dollar strength is dominating across the board. And that's why I think trading sterling, Aussie and Kiwi crosses against euro and sterling, definitely sterling is the way to go here, right? So, man, it's like I haven't had to unpack the market like this in some time. All right, so right through the week, we'll be keeping an eye on the interest rate tracker, okay, as things move along. The fact that these global markets and these bonds are going up, like interest rate yields are going up, it's like, give me a break. As soon as these numbers come out, if we get weak numbers, they're going to nosedive, right? So, but right now we can't do anything about that. There's a massive question mark over what is going on. So, you know what? In the meantime, you could be on those moves. I've just updated my charts and I'm looking at some of these things. Like sterling has just drifted down. It's like a good 150 points away before we hit any resistance. Aussie's like 50. I mean, there's moves here all over the place, but we just need the miracle numbers, which we aren't getting just at the moment. Okay, so just as you go through the course of the week, as I said, I'd be planning around the crosses. That's where a lot of good money has been this year, especially with Trump messing around with the tariffs, right? So let's just keep an eye on that. Now, this week as well, if you come over to the upcoming coaching sessions, you will find the upcoming session tomorrow. Now, this will be added to the trading archive, so don't worry about it too much. But what I want to focus on is the two specific releases where you need to put Primetime Pro into action. I'm going to run through those and what to wait for, what to look for, and then we put it into play. All right, so a little bit of a training session there as we kick off the week. And then from there, after we get through today, the RBA is going to be the key component for the Australasian session. If I can get those words out okay. That's probably all there is at the moment. Just keep an eye on today, the ISM manufacturing numbers. The first US number to really come out. And I tell you what, the market is gagging for some sort of little insight into what's going on in the US economy. And this number here could set the dollar on fire, upwards or down, right? It's as simple as that. When the market is starved of oxygen, they will hit these things extremely hard. I'd reduce your trade size, bigger stops. If you see something, have a crack, but just understand we're not dealing with like amazingly good markets. And that's pretty much it, guys. You know what? We're just going to sort of work our way through these markets. There will be good opportunities this week. I can feel it. It's just a matter of being patient and waiting for the opportunity. All right, guys, have a good one. All the best. Cheerio.